What if two truck drivers are running the same routes, driving similar miles, and working just as hard, but one struggles to break $80,000 a year, while the other clears well over six figures? The difference isn't skill or luck, it's the role they choose. Today, we're breaking down the real income differences between owner-operators and company drivers, and the truth most people don't talk about. In the trucking world, these two roles might look similar from the outside, but financially, they operate in completely different realities. A company driver is an employee. You're hired by a carrier, assigned a truck, dispatched loads, and paid either per mile, per hour, or on salary. Most expenses are covered by the company, and your main responsibility is simple: drive safely and deliver on time. An owner-operator is something else entirely. You're not just a driver, you're a business owner. You own or lease the truck, choose or negotiate loads, and handle the financial responsibilities that come with running a small business on wheels. That includes fuel, maintenance, insurance, permits, and sometimes even dispatching services. More control, more freedom, but also more responsibility. Now let's talk about company driver income, because this is where most people in trucking start. In the United States, company drivers typically earn between $55,000 and $85,000 per year. Drivers in specialized freight, long-haul routes, or high-demand lanes may push closer to $90,000, but that's usually near the top end. Most company drivers are paid per mile, which means income depends heavily on miles dispatched, freight availability, and downtime. When freight is strong, paychecks look good. When freight slows down, income drops, and there's not much you can do about it. You don't control rates, loads, or lanes. The upside is stability. You don't worry about fuel prices, breakdowns, insurance renewals, or surprise repair bills. Benefits like health insurance and paid time off may be included. For many drivers, that peace of mind is worth the trade-off. But there's one major limitation. Your income has a ceiling. No matter how experienced or efficient you are, your pay is capped by the company structure. Now, let's switch to owner-operators, because this is where the numbers start grabbing attention. Owner-operators often hear about gross revenue figures ranging from $180,000 to $300,000 or more per year. On paper, that sounds life-changing. And that's exactly why so many drivers want to make the jump. But here's the critical word most people ignore: gross. Gross revenue is not profit. It's the total amount coming in before a single expense is paid. And trucking has a lot of expenses. This is where the real story begins. Fuel alone can cost anywhere from $60,000 to $90,000 per year, depending on miles, fuel efficiency, and market prices. Truck payments or leases can run $25,000 to $45,000 annually. Maintenance and repairs often average $15,000 to $30,000, and that's assuming nothing major breaks. Insurance adds another $10,000 to $18,000. Then you have permits, plates, ALD systems, tolls, accounting, taxes, and often dispatching fees. When you add everything together, expenses can easily eat up 40 to 50% of gross revenue, or more if the business is poorly managed. After all expenses are paid, many owner-operators realistically net between $100,000 and $150,000 per year. Some make more, especially those with strong dispatching, low operating costs, and smart lane selection. Others make less, and some struggle to outperform company drivers at all. This is the part most people don't want to admit. A bad owner-operator, one who runs cheap freight, ignores costs, or doesn't understand the business side, can make less than a company driver while carrying far more stress. But a smart owner-operator, one who treats trucking like a business, and not just a job, can out-earn a company driver by 6 figures. So who really makes more money? On average, a well-run owner-operator does, but income alone doesn't tell the full story. Lifestyle matters too. Company drivers trade income potential for predictability. You know what your paycheck will roughly look like. You clock in, you clock out. The stress stays mostly on the company side. Owner-operators trade predictability for control. You choose when to run, what to haul, and how to scale, but every decision impacts your bottom line. There's also risk. Company drivers are protected from market swings. Owner-operators feel every fuel increase, rate drop, and slow season directly. The reward is higher potential, but the pressure is real. So which one is right for you? If you value stability, minimal risk, and simple paychecks, company driving makes sense. If you want control over your income, are comfortable with responsibility, and think like a business owner, the owner-operator path may be worth it. At the end of the day, trucking isn't about who drives harder, it's about who manages smarter. If you want more breakdowns like this on trucking income, dispatching, and real-world comparisons, subscribe to the channel. Because in this industry, understanding the numbers can be the difference between surviving and scaling.